Hello, and thank you for taking the time to view the Legacy Private Bank foundational video. My name is Christopher Holt, and I'm the co-founder of Legacy Private Bank. Over the next few minutes, I'm going to be discussing with you a system that we believe that every household and business should have in place for their cash flow management systems. So without further ado, let's get started. So at Legacy Private Bank, we believe the perfect life is having abundance in all 5 areas of life. You have occupation, spiritual, personal, family, and financial. Now, we're going to be focusing on the financial aspect of these areas, but we have to start with asking some questions as we move forward in talking about this process. And one of the questions that we have to be asking is, could it be possible that there are more efficient environments to store wealth outside of commercial banks that you are not actually aware of? When we talk about this key components of the wealth building system, it's basically a pyramid. And you think about building a home. We want to look at the foundation of that home, and we want to make that foundation as strong as possible, or even the building that you might be building. We want to make that foundation very strong. In the foundation, when it comes to wealth building, you've got to have financial education. You've got to have financial awareness. And we also believe you need to have a saving strategy that can propel your finances to the top of that pyramid, to where the freedom of the 5 areas of life that we talked about earlier are sitting at. So within this foundational area of the pyramid, we have the wealth foundation portion of it, that we have areas here that you see in the green portion, where we're talking about the living trust, property and casualty, asset protection, debt strategy, insurance. We believe that every financial component or every financial system that you have in place needs to have this foundation in place, no matter what it is. Because getting to the top portion of this pyramid, where you have the wealth acceleration, now you're talking about the financial freedom, your investment strategies, and your cash flow management systems in place. It's always going to be different for every person or every business, because you might be investing in real estate. You might be investing in stocks, bonds, and mutual funds and things like that. Or you might be just investing in other businesses. But no matter what it is that you're investing in, you have to have that foundational portion in place, and it's going to be the same for everyone on the foundational portion of it. But going forward, you need to understand that banking is encompassed in every aspect of this wealth building strategy that you have, or whatever that strategy might be. Everything goes through the banking process. Now, we focus here with an infinite banking concept introduced by R. Nelson Nash. And it was a book that he wrote, Becoming Your Own Banker. And then this book, it talks about some different areas here that we're going to talk about in detail. In the first few pages of it, it says, Becoming Your Own Banker, the Infinite Banking Concept is a text for a 10-hour course of instruction about the power of dividend-paying whole life insurance. Further goes on to say that this book is not about investments of any kind. It's about how one finances the things of life, which can certainly include investments. It's not about rates of return. Then we talk about the problem here that this book speaks on, is you finance everything in life. You either borrow money and pay interest, or you use your own money and give up interest that you could have earned. The problem is that all these items are financed by other banking organizations. So what's common when we talk about levels of income? Here we're looking at the top percentages of income of U.S. households within the United States. When we look at the top 50% earners in the United States, they're making $41,740. The top 25% is making $83,682. Top 10% is making $145,135. Top 5% is at $208,053. The top 1% is over $515,317. But how about worldwide? What is the top 1% of earners making worldwide? They're making $34,000 to be in the top 1% in the world. Now, you look at these income levels. Income is not the problem when it comes to the United States. Income is not the issue. It is about how Americans save. How much should you be saving? Well, if you look at this was taken as of January of 23. The United States, in the US, the personal savings rate was 4.5%, less than 5%. And still that way in 24. If you're looking at this in 2024, it still was around that same range. It hadn't changed very much. And we're taking this video around October of 2024. And this is something here that is very important to understand when you look at this, is that what's common in the US is to say less than 5%. And what's uncommon is to allow you to save anywhere from 10 to 30%. And that is what we believe the infinite banking system will allow you to be able to do as your family household, or within your business, how you can actually put this kind of money aside and still actually be able to use it at the same time. We're going to talk about that as we go forward. But let's get into future tax rates. What do you believe? Do you believe that taxes over the next 20 years are going to be lower? Do you believe they're going to be higher? Or do you believe they're going to stay the same? What do you think? Most people that I ask this question to believe that absolutely the taxes are going to be higher. Probably 99.99% believe taxes are going to be higher. So with that in mind, I have a business proposal for you. You upfront all the money. You take all the risk. You manage the business on a day-to-day basis. 30 years from now, I'll tell you how much you're going to owe me. Would you want to go into business with me? Well, probably not with those parameters. But that is exactly what people do when they put money into IRAs, 401ks, or any plan that's going to defer interest to a later date. So let's talk about that. Here's an example of someone putting in $5,000 into an IRA or 401k, just a one-time contribution in this particular example, where their contribution is in a 20% tax bracket, but they're earning 10% a year. We're just going to say they're earning 10% a year, never goes down. It's a straight 10%. We know that doesn't exist, but let's just say this is what's happening in this example. Now, if you understand the rule of 72, the rule of 72 says if you divide your interest rate that you're earning by 72, that's going to tell you how long it will take for your money to double. So in this example, we're going to say that they're putting in $5,000 at age 45, and that's going to double at age 52, for sake of argument, 7 years at age 52, $10,000. And at age 59, it doubles again at $20,000 at age 59, doubles again $40,000 at age 66. But what do IRAs and 401ks give you for the benefit of putting the money into these types of programs? Right, if you said it was a deferral. Exactly. But what do people usually do with that deferred money that they get in their paychecks if they're putting this money through a 401k? Or what do they do with the deferred money that they're able to get through their taxation, because they're taxed on less dollars at the end of the year in an IRA? What do the people do with it? Well, if you don't know, they spend it. But in this case, we're going to say that we're going to do what nobody else does. Nobody else saves the deferred money. In this case, we're going to say you're going to save it in the same vehicle in the 20% tax bracket, putting in $5,000. That deferred amount will be $1,000. And we're going to say that $1,000 is earning the same 10%, and it's going to double at age 52 to $2,000, double again at age 59 to $4,000, and then double again at age 66 to $8,000. Well, what's the taxes on that $8,000 on the $40,000 when you're ready to retire at age 66? It's $8,000. But look at the amount that your deferred money grew to, $8,000. So please tell me, where is the benefit of putting deferred money into a system or putting money into a system for it to be deferred for a later date to be taxed and take all the deferred money that you earned away in the taxes. Where is the benefit of putting money into an IRA or 401k? Well, there is no benefit. Now, I know some people are going to say, well, hey, Chris, wait a minute. What about matches of a 401k? Okay, I'll give you that. But what you do also have to understand with that is that you're not getting a deferral on that match dollar. And you're also building a huge tax bill at the end of it when you're ready to take that money out. In fact, those taxes can go as high as 50% of what you have in your 401k that you're ready to retire on. You also have to worry about what is the market going to be doing at that time? Where's the market going to be when I'm ready to retire? I could tell you that question was being asked in 2000 and in 2008 when those people were ready to retire and the market took huge hits and those people took years to get back to a break-even point. You've got to do something different with your finances, people. So let's move forward. I think I beat that enough. My question to you here before I move on with that is, if taxes are going to be higher over the next 10, 20 years, why would you want to defer money to that period of time? Well, let's move on. So there's also Roth IRAs. And I'll admit that is a good system to defer, actually to not have to pay any taxes by putting money into a Roth system. But what's different from what I'm going to be talking to you about here versus a Roth or even this with IRAs and 401ks where it's just money deferred is that you can use the money now and have it tax-free when it's time for you to have it later with no limitations. That's the biggest difference of what I want to get across to you today as we move forward with this topic. So let's move on. So who has the cash? There's a book that Rich Dad, Poor Dad, The Cash Flow Quadrant with Robert Kiyosaki. If you haven't read this book, I recommend you do so. What he talks about here is that you have 4 areas in this cash flow quadrant. You have the employee, you have a job. You have the self-employed individuals, you own a business. And you have the business owner, you own a system, people work for you. And then you have the investor, you own investments and money works for you. Well, it's no secret that you should want to stay on the right side of this quadrant when it comes to understanding finances and things like that. But what I want to point out to you here is the banker. You see, the banker is encompassed in every aspect of this quadrant. So in looking at this, you really should want to be the banker and be on the right side of this quadrant as you move forward. But how do banks actually make money? So we're going to go over here an example of how the banks actually flow the money and how they're actually earning money. Now, don't get caught up on the percentages that I'll be showing you here in just a minute, but I want you to concentrate on where the bank and how the bank is actually making its money and how you can actually do the same thing with your money. So in this example, we're just going to say you're depositing money into the bank and you're earning 4%. Now, we know the banks are not paying us 4%. Again, don't get caught up on the percentages. Just follow along with me here with the numbers and it'll make sense in the end. But in this example, we're going to say you're depositing money. They're paying you 4% on this money. And what do they do with it? They take that and go loan it out to others. In this case, let's say it's a mortgage and they're charging individuals 7%, an example, to buy or have the privilege of using the money to purchase that home. And these people are going to sign a contract and flow that money right back to the bank. Okay. Then the next individual is buying a car. And the bank wants to charge them 8% for the privilege of borrowing this money to go buy that car. And they sign a contract to flow that money right back to the bank. And someone else might want to do a home remodel. And the bank is going to charge 9% on that loan. And this person signs a contract to flow that money right back to the bank. Then someone does debt consolidation. Say the bank is wanting to charge them 12% for this debt consolidation loan. This person signs a contract to flow that money right back to the bank. But now what's happening here? on this mortgage, this person may be earning 4%, but they're paying 7%. So that difference there is 3%. The difference from the 4% and the car loan of 8% is another 4%. And the 4% difference from 4% and the 9% from the home improvement loan of 9%, that difference is 5%. And from the debt consolidation loan of 12% and the 4% that's going out, it's another 8%. So what is the bank actually earning in this example? Some would say they only earn 20%, or well, if they're paying out 4%, they're actually earning 16%. Well, you would be wrong. The bank is actually earning 500% in this example because they're earning 5 times more than what they're actually paying out. And folks, this is not just me saying this. This is on the smaller scale of what the banks are actually earning with this process. We're talking about banks actually earn anywhere from 400 to 1,400% with the money that flows through the banking process. So we believe it is something that is very important that everyone needs to understand how the banking system works and how they can take advantage of this process with their finances or their business finances. Now, again, it's not just me saying this. You can go to BauerFinancial.com and check the earnings of any bank or credit union in that process. It's absolutely astounding of what you might find. But I challenge anyone to find any bank that is earning less than 400% on the earnings that they're bringing into their banking process. Challenge you. If you do, please send me a note. I'll give you credit for finding that for me. But I haven't found it. No one else has found it. And I've been offering this for quite some time. So let's move on. So now banks have reserves. Here we have a few banks that I'm sure you are aware of existing. You might be a part of some of these banks that I'm showing you on the screen. And this just gives you some of their reserve money at the time when we took this snapshot of what they have in reserves at this time. But where are they putting their reserve money? Well, it's in something called BOLI. It's bank-owned life insurance. In fact, it's a whole life insurance policy that these banks are actually using. And that's not index life insurance. Don't get it confused. It's whole life insurance. And there's a reason that they use whole life insurance. I'm going to give you more details about this as we go forward. But if the banks are putting billions of dollars into a whole life insurance policy for their reserves, shouldn't that be something that we also look at using for our finances? We believe so as well. So let's look at what's common and what's uncommon about whole life insurance. What's common and what you might have heard is its low rate of return. It's expensive to own. It's the worst investment of all time. The truth is that whole life insurance is not an investment. Whole life insurance was never designed to be an investment. That is what the infinite banking process is all about. And let's go on further about that. What's uncommon is the guarantees that are in whole life insurance. And these 7 components that you see here in front of you right now, let's go through each one of these because this is very important to understand about whole life insurance. First off, we have the guarantees. It has a death benefit. Cash value increases that increases every year, actually increases every month. It has level premiums that never go up. Then it has constant compounding with the cash values that are inside of it. Here at the top portion of this, you have the saver and the borrower. And this is showing you an example of how the saver is one that likes to pay cash for everything. So they will save money, step ladder up to save money, and then they'll go purchase something or buy something. And then they will fall back to zero and then save again to buy the next thing and fall back to zero. Versus the borrower will borrow money and then they're stepping back up to get back to zero. And they borrow again to step back up to get back to zero. In any case, neither the saver or the borrower is able to get away from that $0 line. Versus the wealth creator that you can become within an infinite banking process, because it allows you to do both of these at the same time. Your finances are continuing to grow as long as you're using the money and paying yourself back with interest, because now you have control. That is pretty much what this is all about when it comes to infinite banking, is you keeping control of the money. There's liquidity. Now, liquidity comes in the form of being the foundational portion of this, as well as the future opportunity and the acceleration portion of this. When we talk about that wealth building pyramid, it is flowing throughout the entire area of foundation and acceleration. Because if you're a real estate investor, just as an example, sometimes deals come through you and you need that cash right now. You don't need to be waiting on it. Well, here's a perfect way to use it by having an infinite banking process or infinite banking system in place for your business, to have that liquidity, to be able to use that money to go purchase that home, and actually have that money that you're able to use in the system still be earning while you're using the money in other places to earn on the investments that you're putting the money into. We'll go through that in a little more detail as we go forward with this video. And you have flexible loan provisions, guaranteed line of credit. You don't have to worry about having perfect credit. You don't have to have any credit. It's not about your credit. It's an unstructured loan. It gives you ultimate control. You determine how and when you want to pay it back, if ever. There is nothing like this. And it's private. Now, this slide is blank, but it's blank for a reason, because it's private. No one will ever know what's going on with your system unless you tell them. It has a monthly cash value growth. It's guaranteed cash value growth no matter what happens with the market, because it's not based on the market. This is something here that is not known to every single even policy that's out there. There's only specific companies that allow this to happen, where your money is able to grow every single month, compounded every single month on an annual interest rate. It is very powerful. It's a very powerful component that will improve your income statement every single month. And then you have income tax-free transfer of wealth. See the national debt figure there. At the time we did this was around 31.6 trillion. And the insurance industry death benefits are around 28 trillion and growing. It's a huge tax-free transfer of wealth in this system within itself. And a competitive yield. Now, this is something that we've had, I won't call it fights with people about the competitive yield. But when you think about the amount of interest that people are able to operate within this system, you're talking about a return that is somewhere around 4 to 5% on a guaranteed basis every single month, every single year, compounded, uninterrupted, tax-free. So if you're looking at a 5% return and you're in a 20% tax bracket, that's actually a realization of around 6.25% annualized return. That is very competitive on something that is guaranteed to happen, not something that you have to worry about, oh, well, gosh, is the market going to be there for me in the end? Very competitive. Let me give you some examples of this as we go forward. So we look at the difference from banking versus investing. Investing encompasses intentionally separating your control of money with the expectation that additional money returns in the future. So you're hoping with investing. Versus with banking, it's intentionally keeping your flow of money permanently in an environment where you have complete control and accessibility. But how does that apply to you? The infinite banking system, let's talk about how this works. You take your business cash flow, your personal cash flow, put that inside of a dividend-paying whole life insurance policy that's structured for banking with the right companies. And we'll talk about that as we go forward. And you borrow from the general fund of the insurance company using your cash values as a guide as to how much you can borrow during that time period. You use that money to pay off debt if you have debt, or acquire additional assets, thereby returning that principal and interest earned either from the acquiring additional assets or the money that you were paying out to someone else, or allowing you to recapture the interest that you're paying out to other people through the form of principal and interest back to your policy to pay off the loan. You're now creating a flow of money for yourself where it is continually compounding inside of the policy and compounding outside of the policy. This allows you to be able to eliminate debt very quickly and acquire more assets as often as you choose. I'm going to give you some examples here in just a minute with real people and real dollars in just a moment, but it's a very powerful system. Can create a lifetime of guaranteed income for you that is totally tax-free. Now, we're going to get into how you can get all the money back for all the cars you buy. This is something that we do on a live presentation. I usually ask people in the room, how many cars have you purchased in your lifetime over the years? And I'll get a different variation of numbers that people will say. And I'll usually apply an average of about $30,000 per car. So let's say in the room it was 30 cars at $30,000. That's over $900,000 of cars that were purchased with that number. It's a huge number of people being able to get all that money back with this type of a system. Think about what your particular number is and apply that number to yourself when you see this example. So here, we're just going to look under the hood of the vehicle that we're calling the infinite banking system. In this case, we're going to talk about the premiums and the deposits, or what we call deposits instead of premiums, because we're using this as a bank. Instead of it being premiums or a bill, it's actually deposits. We like to think of it as you're depositing into this system because you're actually going to be able to earn from this system very greatly. If you follow me along here, how this process actually works. Now, age doesn't matter because the age has nothing to do with it in terms of your cash value growth. Now, the age is going to affect the death benefit because the older you are, the lesser death benefit you'll have, and they're based on $10,000. In this case, you're showing $10,000 going into it. And the younger you are, you'll have more of a death benefit. But that's not important when it comes to the cash values. So in this example, we're going to show that this person is putting in $10,000 a year in this system over 7 years, and they're going to stop at that point. Okay. If we look at this a little closely, we're going to look at purchasing a $25,000 car. We're going to do that in year 4. And we're going to apply a system to pay this back to ourselves of $500 a month or $6,000 a year to pay that car off over the next 5 years. So $6,000 a year is going to be paid back into the system a year over 5 years. That's $30,000. We deposited $10,000 a year over the first 7 years. Now, we're showing you this, doing it in the 4th year. We would never have you wait normally to wait for the 4th year to actually use the system. We want you to use it from day one. In fact, you can use it as early as within the first 30 days of you putting money into an infinite banking policy. But in this case, we're just showing, just for example's sake, waiting for the 4th year, purchase this $25,000 car. Okay. Now, in this example, this person has put in over the first 7 years, $70,000, plus they've paid $8,000 after the 8th year. I'm sorry, $30,000 after the 8th year. If you total those up, that's $70,000 in deposits plus the $6,000 paying back for the loan of $25,000 that they took. That's a total of $100,000 that they're in to this policy. Now let's look at the numbers though, however, what happens at the 8th year. Now they've paid $25,000 out to buy the car. They're into it at $75,000. That's the $100,000 minus the $25,000. They're into it for $75,000. But look at the 8th year cash value available to them. It's $73,226. That is a recapture of interest and principal of 97.7%. Incredible. But let's keep going. We're not going to stop there. Going to buy another car in the 9th year at $25,000 and do the same thing as before. pays $500 a month or $6,000 a year in this example over the next 5 years. That totals $130,000 that they're in to this policy at the end of the 13th year, that they have now purchased 2 cars at $25,000 each, or totaling $50,000. So if you deduct the $130,000 that you've put in minus the $50,000, that's $80,000 that they're into this particular policy or into this system. But look at the cash value at the end of the 13th year. The cash value is $95,797. That is 119.7% recapture of principal and interest. Folks, I don't care how you look at this or how you may be thinking of what whole life is and all these things you may have heard from others. The numbers don't lie. It is a very powerful system. And I'm just giving you a small example of a $25,000 car, someone purchasing a car every few years through this system. Now, in this, we're not telling you that you got to put $10,000 into it over 7 years. It could be somewhat, some people put $20,000, some people put $100,000, some people put even more than that, or some people put even less than that. I've seen people put as less as $200 a month to do these types of systems. But it doesn't matter what level that you start with it. The thing is to get going with it so this process can work for you and even for your business at every level. It does not matter. This is something you can do, and it is very powerful. But let's move forward as we move on and show you how this can actually work in real life. We're going to do a debt analysis of a business owner. And we're going to show that this business owner had inefficient dollars that were found, because we do an analysis of every business that we work with to see, okay, where could you possibly redirect some funds into a banking system that we're showing you here that can benefit your business or your household. So we'll do the same thing for individuals with their own debt household business. You don't have to own a business, but I'm just showing an example of a business owner in this particular example. In this case, they had $2,805 monthly that we were able to redirect to the system. Now, this showed their current debt was at $880,000, over $880,000 in current debt. They were going to be paying off their debt with the current way they were paying it in 28 years. They were paying out $1.5 million as a real debt scenario if they kept making those payments over that 28 years. That is incredible, the amount of money that interest can apply to your debt. It's not just the debt, people. It's the interest that you're paying out, the volume of interest more so. So that total interest amount was $641,548. If you look at this next slide here, this shows you upper right corner, you see the true interest amount that they're actually paying is 42.66%. That means that only 57.34% of their payments were going toward principal. That's huge. But what were we able to do for them with this system? Their current debt payoff would have been 28 years. Their debt payoff in years of doing this system dropped it down to 4.75 years. That is huge for a business owner and his family to be able to, or his or her family, in this case it was his family, that was able to do this for his family and show him how he can save $413,385 in interest over that 4.75 years, freeing up $17,249 a month, or $206,000 plus a year. And in 11 years, when he actually turned 65, he would have $1.62 million available to him liquid, while all this is paid off. Combine that with the death benefit that came with the program, he's at $2.7 million for his family. That is absolutely incredible how that worked for him. And it's worked for many of our clients that we've worked with. And it can absolutely work for you. So let's look at the stages of the infinite banking process, because there are different stages of this where people use it for different processes. I'm going to show you that in detail, because it doesn't matter where you are in the infinite banking process. What matters is that you're in the process. Okay, so The saver is one that has emergency funds. They use this as an emergency fund. They're in the emergency fund stage. The diversifying options is stagnant money. It's money that you're just letting it sit. They rarely use the policy, have no intentional strategy. Well, that's okay to be just in that because you're at least focusing on the foundation of building your platform as you go forward. A lot of young people are doing this just to put money into it, build that foundation as they are growing. Okay. Then we have the wealth builder, where they're redirecting some cash flow using the policy for personal reasons, finance remodels, cars, education, investments, paying down debt. They're becoming more intentional. This strategy is something, or this particular stage is something that a lot of people are in here. If they have debt, you automatically go into this particular stage of the process. Then we have the banking business. Here is where they're redirecting all their free cash flows, frequent policy use. They finance every investment. They finance every large purchase, and they're excited to pay premiums because they understand it's a deposit, and they understand how they can use this money inside of the system and still pay off debt and do other things that they want to do in investing in other things while still earning inside of the policy because it's growing uninterrupted inside of the system. It's intentional growth. Then you have the infinite banker, where they have complete control. They redirect all money spent, influence at significant loan balances, strategic loan balances, The premiums equal income. They understand this. And it's absolute intention. It's an absolute intentional strategy that everyone can do. Powerful system. So I want to talk to you real quick here about three of the most famous historical entrepreneurs who have used their whole life insurance to start their business, either grow their business or save their business. Either start it, grow it, or save it through the infinite banking process. First one is Walt Disney. Walt Disney started Disney because he couldn't get loans for the concept of what he had, and he was able to pull from his policies to create Walt Disney of what it is today. Then there's Ray Kroc with McDonald's. Ray Kroc couldn't grow his business the way he wanted to, so he used his policies to expand McDonald's throughout the world. And then J.C. Penney's used his policies because in 1929, the stock market crash, he was able to maintain J.C. Penney's to flow through that process and never lost a beat because he had his insurance policies in place. This is not something that is just started today, folks. This has been around for years. These people here did this well before Nelson Nash was able to write his book. So it's not something that Nelson Nash just started. Nelson Nash just brought it to the forefront of what is out there today. But has been used for years. So what are the next steps for you? If you haven't already, get the book and schedule your Becoming Your Own Banker call. Get this Becoming Your Own Banker book. Read the book. Understand the book, because it is something that can absolutely change your life as you go forward. I advise you to go to Amazon.com. Get the book today. Now, here's what you'll receive from Legacy Private Bank. We offer training, lifetime coaching, and mentoring from an authorized infinite banking practitioner. We also recommend that if you're going to do the infinite banking process, that you work only with an authorized infinite banking practitioner. There are a lot of people out here saying they do infinite banking, but they haven't taken the steps to really connect with the Nelson Nash Institute to understand the proper usage of this process. It's not just something that can work with any type of insurance policy. It is not something that is going to be used outside of a dividend-paying whole life insurance policy. Period. We offer direction to navigate our clients' business and personal financial goals. Support. We have continuous support that is available through quarterly group coaching sessions. We offer this every single quarter to our clients is something that our clients absolutely love, because they're basically able to throw out different strategies of how they're using their policies that can help others within the group to say, oh, okay, well, I didn't know you could do that. Very powerful system that we have in place for our clients to actually learn from each other as we go forward. At Success, we aim to empower our clients with the proper financial education to achieve success and goal achievement. We focus on helping individuals set, pursue, and accomplish their specific goals through structured plans, because not every plan is the same. So, folks, here is our contact information. I have here this scan. You can actually scan this. This is going to, if you are looking at this in an area where you can't get to it again, or you want to see it again, of course, you can replay the video that you're looking at now. Just scan that. You can share it with others. In a live presentation, this is we'll have this for people to scan it so they can go back and review the presentation as they please through that scan. Here's our information, our phone number, our email, and our website. We're on all areas of social media. Everyone you can think of, we're out there. So please contact us if you have any questions at all. Would like to know how this can work for you, your business, and your family. Contact us or get back to the person that shared this with you. Make sure that you find out how an infinite banking process can work for you through Legacy Private Bank. Thank you for your time. Have a wonderful day.